So once again, ladies and gentlemen, we're going to call it Money Tuesday. There's definitely more opportunity in the market today than there was yesterday. So happy Money Tuesday. It is August 24th, 2021, 11:18 in the market. In today's lesson, we are going to talk about the RSI. This is a week of trading indicators. Yesterday, we talked about the simple moving average and the exponential moving average, the differences between the two, why we're using them, and how to use them. Today, we're going to continue our trading indicators session, right? A week-long session of trading indicators. And today, we're going to continue that with the RSI. So let's go ahead and dive into this, guys. It should only take about 10, 15, maybe 20 minutes at most. So the RSI stands for the Relative Strength Index. The Relative Strength Index, the RSI, it is a momentum indicator that is used in technical analysis. It measures the magnitude of recent price changes to evaluate overbought or oversold conditions. The RSI is displayed as an oscillator, right? This is an oscillator where it oscillates up and down, up and down, up and down, up and down. So again, this is an oscillator, and it uses a line graph that moves between two extremes. You'll have a reading from 0, right? So if we go ahead and pull this up, you have a reading from 0 to a reading of 100. With your two averages, your two means, the way it comes, a 30 or below is considered to be oversold, and a 70 or above is considered to be overbought. So it's an oscillator, right? We all know it's an oscillator with a line graph that moves between those two extremes. 0 being the lowest extreme, 100 being the highest extreme with the RSI. So a stock, an asset, whatever the case is, whatever you're looking at, right? It's usually considered overbought when the RSI is at 70 and above. And then it's considered oversold when it's at a 30 or below, right? So again, we know that's an oscillator, uses a line graph that moves between those two extremes, from a low of 0 to a high of 100. But anything above a 70, so between 70 to 100, those are considered to be overbought conditions, right? When it's below 30, between 0 and 30, that's considered to be oversold conditions, okay? And it's a momentum indicator. It helps us identify momentum within the stock, all right? So that is the basic breakdown of an RSI. So now it's, how do we read the RSI? So again, we know that RSI values of 70 or above indicate a security is becoming overbought or overvalued. It may be primed for a trend reversal or a pullback, right? An RSI reading of 30 or below indicates that the stock is oversold or undervalued, and we could still see a reversal, right? So again, the stock is screaming to the upside, and it's an 80, 90 on the RSI, right? That could be a great indication that the stock is overbought, definitely a little overvalued, overextended, and could definitely see a trend reversal or a pullback. The stock is dumping to the downside, and it hits a 10, 15, 20 on the RSI. That's an indication that the stock is oversold or undervalued, and we could see a bounce. We could see a reversal back to the upside. When the RSI is oversold and it crosses back above that 30 level, and that 30 level comes standard. That's the way it's set. That's the way it's calculated. That 70 level is the way it's set. That's the way it's calculated. That's the way that it comes. We don't change those levels, all right? So when the RSI is oversold, let's say it's at a 15 or a 20, right? And it crosses back above that 30 level, it can be considered a bullish sign, a bullish signal that the trend is about to reverse. So when it is overbought, let's say it's at an 80, an 85, a 90, it's overbought, it's overvalued, and it crosses back below that 70 level, that could be used as a signal or a sign that the stock is now going to be bearish, that you could see a reversal and start to see the stock pulling back. Just because, this is the most important part of this lesson, so make sure you take the note, make sure you listen to this. Just because the RSI shows a stock is overbought or oversold does not mean we enter the position. No indicator should be used as a standalone indicator. Basically using it by itself to make entries to get out. The RSI is not a standalone indicator. The RSI, like every other indicator, needs to be used in conjunction with other forms of technical analysis to increase your probabilities of being on the right side of the trade. So again, just because the RSI is at a 90 doesn't mean you short it. Just because the RSI is at a 10 doesn't mean you go long, right? How many times have you seen a stock extremely overbought, extremely overvalued, and oscillates for weeks, and it continues to rip and run to the upside? Imagine using the RSI as a standalone indicator. You see the stock is extremely overbought. It's very overbought. It's at a 90 and you short the stock and it keeps grinding to the upside and the RSI oscillates in overbought conditions. It happens. That's why we don't use it as a standalone indicator. Same thing, the stock's dumping. Just because the stock is at a 10, 15, or 20 on the RSI, and that's an indication that the stock is oversold, does not mean we jump into a long position. We use the RSI in conjunction with other forms of technical analysis, with other popular indicators. And that's how we increase those probabilities. That's how we identify 70-30 probabilities, 80-20 probabilities, right? 80% chance of being right, 20% chance of being wrong. The more separate reasons you have to take a trade, the RSI giving you a signal, the MACD giving you a signal, being off support, retracing to a fib level, giving you a signal, right? If you can find 3 to 4 separate indicators that give you a signal to take a trade, that's when you start increasing those probabilities and you have better odds of being right versus being wrong. All right, so take that away. We're not using this as a standalone indicator. We're using it in conjunction, other indicators and other forms of technical analysis to increase those probabilities. So we know what the RSI is. We know how to read the RSI, but what are some cool tips and tricks? I would say a tip and a trick. Not a lot of people know about divergence. People that look at the RSI, they primarily use it for identifying overbought or oversold conditions. But I really like using the RSI for divergence, right? So intraday, 30-minute time frames, hour time frames, daily, weekly, doesn't matter. If I spot divergence on the RSI, that is a very powerful and a very strong indication that we could see the trend shift. I love being able to identify divergence with other forms of technical analysis because it is a very powerful signal that the RSI gives you. So let's talk about RSI divergence. Again, it's my favorite signal that's produced from the RSI. This signal has high probabilities of being validated and the trade working in your favor. So we have bullish divergence and we have bearish divergence. So a bullish divergence occurs when the RSI creates an oversold reading followed by a higher low reading that matches the lower lows on the price. And I'm going to give you guys a visual representation of this. So again, this is just the definition, something to write down. So bullish divergence occurs when the RSI creates an oversold reading followed by a higher low reading, but the chart is making lower lows. So if you see the RSI building higher lows from being oversold, so let's say it's at a 30 and you see the RSI grinding back up, it's building higher lows, but the chart is building lower lows. That's an indication of rising bullish momentum, and that a break above that oversold territory, the 30, could be used as a trigger to enter a new long position, right? Bearish divergence, it's the complete opposite. It occurs when the RSI creates overbought reading followed by a lower high, but the stock is making higher highs, right? that's an indication that there's bearish momentum setting in and that a break back below that 70 level, right? That 70 level could be used as a trigger to enter a new short position. So let's go ahead and give you guys a visual representation of divergence, right? So I'm going to draw up two lines down here at the bottom. This is going to be our RSI, right? This is our RSI right here, right? From 0 to 100. And then I'm going to grab probably, what do I want to grab? Maybe like a light blue. And I'm going to throw that right here, right? I'm going to throw the other one right here. So that's going to be your 70 and your 30. So that's your RSI right there. We got an RSI on the paint, right? And then we're going to go ahead and draw the stock. So the stock, let's say the stock is grinding to the upside, right? And you see the stock is putting in higher lows and higher highs. And let's say we have the RSI kind of following suit, right? It's just kind of following suit. It's oscillating. You see it following suit. And then it becomes overbought. And let's say you see something like this. You see that the stock is making higher highs, right? But you see the RSI making lower highs. That is what we call bearish divergence, right? The RSI is following suit. We have a push and a pullback. We see the push, we see the pullback. We get a higher low, a higher high, higher low, higher high. It matches the chart, right? Anytime the stock puts in a higher high and a higher low, the RSI follows suit. But then you start to see the RSI, right, falling. It's making lower highs, but the stock's making higher highs. That is a great strong indication that we could see the trend reverse and start to see it sell off. Same thing with bullish divergence, all right? You just take the same concept and you flip it, do a 180 with it. Right? So that would be the stock selling off, right? Making lower lows, but you see the RSI starting to build higher lows, right? You see the stock still falling, building lower lows, lower highs, but you see the RSI starting to curl and grind back up. That's an indication that you could see the trend reverse back to the upside. Now let's go show you guys a live example of divergence. I'm sure I can find divergence somewhere on the chart. Sure, I can find it somewhere. So let's go ahead and let's look at a bigger price stock. Let's go look at like maybe like the SPY. No, AMC. Again, I'm just looking to see if I spot any kind of divergence. So I'm like, hey guys, this is a great example of divergence. Right here, slight divergence on AMD. So look at this. So right here, you can see a little bit of that divergence. So we see here that the stock is making higher highs, right? We see here, put in a high, put in a low, and the high. Look at the RSI confirming right there, the high, the higher low, the higher high, the higher low. You see how it's following suit? And then you get this big push to the upside. Stock puts in a high. RSI puts in a high, right? The stock puts in a higher high, but the RSI fails to do so. That is a signal that there is some bearish momentum moving into the stock. So you could have seen that the stock is making higher highs and higher lows. You think that it's in an uptrend, that it's still rocking and rolling, it's going to the moon, right? But then you just look down at the RSI and you see that the RSI is making lower highs while the price is making higher highs. That's a great indication that the trend could reverse. And look what happened on AMD. Trend reversed, right? That's bearish divergence. Now let's go find some bullish divergence. Do we have any? We could see it coming on up on AMD. We could see it, right? But right now we don't have an example. Let's go look at something else. Do we have any bullish divergence that we could spot here? Give you guys a nice little example. Right off the bat, I don't really see any like good examples of bullish divergence, but I'm sure you guys kind of get the gist, right? I'm sure you guys get the gist. We did that example on AMD for the bearish divergence, and it's a complete 180. It's a complete 180. So that would be the stock making a lower low, but the RSI holding a higher low. So if you see something like this where the stock's price is making lower lows, but the RSI is making higher lows, right? That could be an indication that the trend is about to reverse because you have more bullish momentum moving into the stock. So that is what we classify as divergence, right? That's divergence. And divergence is a very powerful signal that's produced from the RSI that gives you high probabilities of being validated and that trade working in your favor, especially when used in conjunction with other forms of technical analysis. Resistance, right? Big level of resistance, a fib extension target, whatever the case is, right? When you see that divergence with other forms of technical analysis, I tell you what, that's a strong signal. It's my favorite signal, and it gives you high probabilities of being, on the right side of the trade for that trade to work in your favor. So we know what bullish divergence is, and we know what bearish divergence is. And you guys know how to spot that divergence and how to use it to your advantage. And it is very, very, very powerful. Okay? So, couple key takeaways from this lesson. Like I said, it wasn't going to be a long lesson, maybe 15, 20 minutes, all right? Some key takeaways. The relative strength index, or the RSI, is a momentum-based indicator that is used in technical analysis. It is a very popular indicator that a lot of traders use on any time frame, weekly, daily, hourly, 1 minute. The RSI can be used on any time frame, and it's a very popular indicator that a lot of traders use. That's what validates this indicator. That's how we're able to use it and how we're able to get an edge by using these indicators, right? Because they're popular. Other traders use them as well. A stock is usually considered overbought when the RSI is above that 70 level, and it's considered oversold when it's below the 30 level. When the RSI is oversold and crosses back above that 30 level, it can be considered a bullish sign that the trend is going to reverse. When the stock is overbought above 70 and it crosses back below the 70, that can be considered a bearish sign that the trend is about to reverse. RSI divergence that we just discussed is a very, very powerful signal and provides insight that the trend is about to reverse. So again, if you're taking anything away from this, the key takeaways that I would give you right now is the RSI is not a standalone indicator. You will never use it all by itself. You use it in conjunction with other forms of technical analysis. That's what increases your odds and probabilities of being right. And then divergence. We have bearish divergence and bullish divergence. It's my favorite signal that the RSI gives me. And it's a very powerful signal. And it provides great insight that the trend is about to reverse to the upside or to the downside. All right, so that wraps up our lesson on the RSI. Tom is saying SPRT was a perfect example of some bearish divergence. So what we can see here is we have the stock making the highs, making higher highs, making higher highs, but the RSI is failing. That is a good sign, a good signal that we have bearish momentum moving in, and we could see the stock pull back even more to the downside. So right now, seeing the RSI is losing steam. The RSI is fading. The stock looks like it's now struggling a little bit, making higher highs. RSI making lower highs. That's a strong indication that SPRT can continue to sell off and pull back even more. So that would kind of make me be more on the sidelines. I wouldn't really be looking to jump into this trade because I see that. I'd be looking for more of a pullback on SPRT. So that is a great example of divergence right through that level, right? It's clear as day. We can see that. Right here is not divergence. Right here is not divergence. The stock makes a lower high. RSI makes a lower high. That is not divergence, but this is a great indication of divergence. Once again, stock is making these higher highs. RSI, during the same time period, is making those lower highs. So that is a sign that there's going to be more bearish momentum moving into the stock and that it could continue to fall and pull back to the downside. All right, so the RSI, what it is, how to read it, why we use it. It's very popular, right? Some cool things about the RSI that I love using. Look at SPRT. It's cracking, it's falling, it's fading. And we could see that momentum picking up from the bearish side based on that divergence on the RSI. So you had a couple great examples on bullish divergence, on bearish divergence, and that's how I use the RSI. And you can use it on any time frame, daily, weekly, monthly, hourly, the 1 minute, doesn't matter. If you spot divergence and you can use it in conjunction with some other forms of technical analysis, support, resistance, trend lines, fibs, whatever, that's going to give you a strong indication of being on the right side of that trade, guys. All right, so do we have any questions, comments, or concerns about the lesson? Again, anything that doesn't make sense, now's a great time to go ahead and ask. You can see it forming in real time. We saw it forming in real time there on SPRT. You could see it form in real time, not in hindsight. Absolutely. It is a lagging indicator. The RSI is a lagging indicator, just like about every other indicator out there. It lags. It's delayed. But it is a very accurate, very high probability signal that the RSI produces, the divergence. So again, it's not just like you're going to see it in hindsight. You could definitely see it as it's developing, 100%. Live example on BABA. Let's go look at BABA. Ba-ba. So here's another example. Look at this. BABA making lower lows, but on the RSI making a slightly higher low. It's crossing back above the 30 with divergence. That right there is a signal that the trend is about to reverse, that you're going to see more buying momentum move into this play. We have the stock making lower lows. We have the RSI making higher lows. The stock is crossing back above the 30 out of oversold territories, right? Now, can we apply this with other forms of technical analysis? Where is it at? It's right off that prior little level of resistance before the stock broke out. Right here, we had a high, resistance, it broke out, and it's been trending above that level ever since. So the stock is now pulling back to that level. Number one, do we have any other separate reasons to get involved? Let's run a Fibonacci retracement on this trade. From that low, let's run it up to that high. It's also pulling back to the 50% fib. So, how many separate reasons do we have to take this trade? We have a 50% retracement, number one. Prior high, prior breakout level, number two. Divergence, number three. Getting back above that 9 EMA, right? Resistance. Back above the 9 EMA. May hold this play up as support. You've just established three good separate reasons. Add in that fourth one in there. You have right at three separate reasons this could be a good trade. So how would you trade it? You would look to make your entries. Your stops would be underneath that low. And you would look to take profit as the stock grinds back to the upside. So again, that is great. A great example on BABA of bullish divergence. Once again, stocks making lower lows, RSIs making higher lows. Great example on BABA for bullish divergence. We've identified that we retrace to the 50% fib. We're trying to put in some shorter term higher lows. We're trying to get that reversal, trying to bounce back on up. Again, that's how we do it. We identify the divergence. We identify multiple separate reasons to take a trade, and then we attack. What's another thing? Do we have an uptrend on the play? Wouldn't really say there's an uptrend on the play, right? I was thinking maybe there's a little bit of an uptrend here. Definitely not. So again, we wouldn't have an uptrend here. We just have the 50% pullback. We'd have that divergence off of prior resistance, new support.